We just reached a moment in this cycle, whether it's a 4-year, 5-year cycle, who knows? But we reached a moment when I believe Bitcoin will start to move with real momentum. In just a couple of days, Bitcoin has ripped from around 80,000 to almost 89,000, and then it pulled back. Retail, we know, is nervous, influencers sound confused, and sentiment feels locked in fear. No one knows what's going on. But I believe, as I was saying, that this is the moment when it's more important than ever to not believe the smoke and mirrors, to look past the smoke and mirrors and see what's really going on. Because I believe the shift that has happened outside of crypto over the last 48 hours, and almost nobody saw this. However, if you put all the pieces together, Bitcoin's next move becomes quite clear. So stay with me throughout this video, because the signals that flip this week include some of the strongest Bitcoin reversal markers we have seen this cycle. And I want to show you exactly where they just flashed. All right, so getting started, we know the US stock market, wrap your head around this, added $1 trillion in a single day. That is a wave of liquidity. And at the same time, the S&P 500 daily options volume hit $3.5 trillion notionally, which is the highest level ever recorded. And yet, the fear and greed index is still showing extreme fear, so it hasn't caught up yet. And this is interesting because the S&P 500 is down only a few percent from all-time highs and bouncing hard. So this combination is rare. Markets do not usually show extreme fear during a flood of capital like this. So we're definitely seeing a lag. And if you're watching this video, you're early. So when I see this kind of setup, it tells me the money wants exposure. But investors are still too scared to admit it. Maybe they're still just too traumatized, which you can't blame them. And this tension builds into something bigger. But all right, let's put a pin in that and let's move into the deeper part of the story today. And that is that AI is driving the economy right now. AI is now responsible for half of the US's GDP growth, according to the Wall Street Journal. One sector carrying that much, this much economic weight is a rare moment. And we know that AI compute demand is growing 50 to 70% year over year, and that the largest companies in the world cannot keep up with it. And the story is evolving so fast. We see that Alphabet jumped while NVIDIA pulled back after reports that Meta is considering using Google AI's chips instead of NVIDIA's. And this may honestly be a PR negotiation stunt, so we'll have to see how it plays out. They probably just want a better deal. Anyway, this does not signal weakness in NVIDIA. It simply shows how much demand there is for AI compute. Google's TPUs, NVIDIA's GPUs, and every other piece of hardware are being pulled into this surge. So to keep this very simple, if you haven't been following AI news closely, AI systems need enormous compute power. It's actually the one linchpin holding back, or rather upon which the AI sector actually depends on in order to truly grow and scale. And we know, this is a topic for a different video, but we know that as technologies evolve and improve, their prices eventually go down and manufacturing improves, just like it did with the phone or the early day cell phones. Remember, they were like bricks you would see in 80s sitcoms, and then now they're so small and sleek and they're cheap. Well, we expect, at least I do, and I know several that watch evolving technologies believe the same, that AI compute power will become cheaper and easier to create and provide to AI companies. But I think, if I could just slip in my own sort of philosophy on this, is that I think it's ultimately a good thing, considering our LLM models have yet to be fully aligned with human intentions to make sure that they don't hurt humans as they continue to develop so fast. So I think the fact there's a bit of a break, right? Some brakes being put on AI's development contingent upon, once again, compute power. I think it's ultimately a good sort of like checks and balance scenario that exists. because hopefully these AI models will reach some better alignment with human um, values, at least in terms of human life, right? And making sure that they never hurt a human or an animal for that matter. But anyway, I digress. So back to what we're talking about in today's video. Because right now, what we see is that companies are scaling at full speed to keep up, and investors keep flipping between AI bubble and AI is the next big thing, sometimes inside the same day, too. And this swing in sentiment shows how emotional this market has become. But the underlying reality remains steady. This level of investment pulls liquidity into markets at a pace we have never seen before. Meanwhile, while AI has been pulling more capital into the system, something just moved in Washington as well. And that is the fact that politics and geopolitics just flipped. What do I mean? Well, President Trump signed the Genesis mission, an executive order to build an integrated AI platform using federal scientific datasets. The White House is treating AI development with the same urgency as the original Manhattan Project. This level of national commitment usually leads to a huge investment cycle or cycles. Then we got news that Ukraine agreed to the full terms of Trump's peace. That to me is truly mind blowing. I hope it's true. It's hard to believe sometimes that peace treaties, are possible between nations that have been fighting so long, like between Israel and Palestine, but it's possible as we saw. We just don't know, as a little parenthesis right here, we just don't know at the expense of what or what was actually negotiated, though, right? To agree to peace terms. But that will have to be something we follow closely. For now, it's initially good news because so many, I think Trump said it was thousands of soldiers dying on both the Russian and the Ukrainian side of the war, which is absolutely devastating and sad. And I'm so sorry if you know anybody or you're Ukrainian or you're Russian. That is so, so heartbreaking, no matter what the reason. It's heartbreaking that any people should have to die for this, oftentimes because soldiers are just sort of innocent bystanders that are forced to participate. So, very sad, especially for their families. So, this is really good news. And it lowers global risk in terms of the investment financial market and the investors that participate within them. And typically, a drop in risk premiums usually pushes capital towards growth assets. So that's something else we can expect. And we know that Bitcoin is still like considered ultimately like the ultimate risk asset. And to top things off, Eric Trump is showcasing an American Bitcoin mining facility. And this announcement adds another layer to today's storyline because Bitcoin mining is now being presented to the public by political leadership. That used to be unthinkable, unimaginable if you've been here even, starting a year ago or 2 years ago. So now that we have markets heating up, AI pouring money into the system, and geopolitical pressure easing, the setup is building, guys. So, all right, now let's go to the part of today's video that everyone I know is waiting for. And that is the fact that the Fed opened the door. Right now, we see that producer inflation came in mixed, but the labor market looks weaker. And this combination creates pressure for the Fed to start easing sooner. Rate cut expectations, as it is right now for December, jumped from 27% to 85% in a few days. So, this is a monumental shift that we're seeing. Markets are now pricing in faster liquidity. And on top of that, the BEA delayed PCE and has not even scheduled GDP yet. And when the data pipeline slows down, markets tend to move ahead of the story instead of waiting. This creates volatility, but it also creates opportunity. Okay, so now that we understand what's going on the macro level and within the Fed, let's switch gears and talk directly about Bitcoin, which I know for most of you is what you actually want to talk about. Bitcoin right now looks weak, but the data says otherwise. We see that Deutsche Bank analysts listed 5 reasons for Bitcoin's pullback: correlation with tech, Powell's tone last week, slower movement on the Senate's regulatory bill, institutional outflows, and long-term holders taking profit, all combined. And these show up when a market is resetting, guys, not collapsing. And here's where it gets interesting. Whales have been buying this entire drop, this dip. I hope that has been you. Let me know in the comments if you have been able to stack some more sats. And the whale versus retail delta went straight off the chart. Retail either oversold or stayed frozen, of course, which is actually very sad because they just don't know any better. Not unless we bring them here to my channel, which is why I always encourage you to share my videos with friends, especially if they have no idea or are skeptical about Bitcoin or crypto or just think it's too complicated. I do my very best always to try to speak calmly and explain what's going on in a way that makes sense. Anyway, right now we see also that more than 5% of all Bitcoin changed hands during this drawdown, which always happens and is ultimately good for Bitcoin and Bitcoin's price and Bitcoin's longevity, because we want Bitcoin being held by people that are not going to sell it, panic sell, or whatever their reason might be. We want people that are going to hold it, because the more people that hold it steady, the more secure Bitcoin's price is. And moves at the size that we have seen lately during this recent drawdown show up in capitulation events, when supply transfers from weak hands to strong hands once again. We also see that Bitcoin-backed credit volume is suddenly accelerating as well. And Saylor even posted about it with his probably nothing line. When credit forms around an asset, it signals growing confidence and growing usage. And that is how assets turn into financial infrastructure. And we see traditional finance is paying attention now. Matt Hogan did a call with more than 2,000 advisors at a major US bank because they wanted to understand Bitcoin. The simple fact that happened, that this happened, is proof of mainstream interest. But now let's talk about the signals that point forward. Because right now, Bitcoin's reversal signals are flashing. Bitcoin's Sharpe ratio collapsed towards 0, which is the exact level it reached before major reversals in 2019, 2020, and 2022. This usually shows up when risk-adjusted returns reset. We may also have printed an exhaustion low. And every time Bitcoin forms one, the first leg of the rally typically moves 1 to 1.3% per day. And that pace carries Bitcoin toward 90 in days, 100 in a couple of weeks, and 120 within a month or so when the trend is live. And all of these signals line up during moments that feel confusing for retail, but historically lead into expansion phases. But all right, let's wrap this up and bring it home. Because what we understand now is that the world outside of crypto has flipped first, and that $1 trillion has hit the stock market, and that AI is the engine running this entire economy. And we currently have a Fed backed into a corner and are seeing peace talks easing global tension, all while political leaders openly embrace Bitcoin infrastructure. So these are still truly historic days, and I hope you see that despite this moment being so surreal. We also see right now that whales have stepped in while retail has been hesitating, not surprising. And we also see that supply has changed hands at levels that only appear during major resets, and that credit markets have been forming around Bitcoin, and that on-chain metrics line up with historical turning points. So while this moment may feel messy and uneasy, I understand. But underneath all of this, it's so important to realize that the pressure is building exactly the way it does before the next phase. And I hope today's data and all of these facts really show you that this is what is happening. So I hope you haven't sold your Bitcoin, and I am going to make a video probably Thursday or Friday around Thanksgiving on the key blue chip tokens that I'm holding and the ones that I believe will be bouncing back here very fast, or will be bouncing back in strength as the market recovers. So stay tuned for that. Stay steady. And if you gained value from today's video and this breakdown, I just ask you like the video and share it with somebody who needs to know what's going on. Make sure you're subscribed if you haven't already. It helps me so much and helps the YouTube algorithm spread the word on my channel so more people can learn in an unbiased way as much as possible, even though I do share my bias. But I also always explain why. I love you guys so much, and I'll catch you guys here tomorrow. Ciao.